Hi, crypto lover. Have you already heard about cryptocurrency? If not, don't worry. We'll tell you everything about it. If you are a beginner and don't know how to start cryptocurrency trading and its basic concept, you are in the right place. This crypto trading course is for you. Before we dive in, welcome to Financial and Investment Wisdom, your source of financial education. If you want to keep growing your financial assets, smash that subscribe button and give us a thumbs up. Cryptocurrency is a digital or virtual currency secured by cryptography, making it nearly impossible to counterfeit or double spend. A cryptocurrency is basically a form of payment that can be exchanged online for goods and services. Many companies have issued their currencies, often called tokens, and these can be traded specifically for the important goods or services that the company provides the most. Consider them like arcade tokens or gambling club chips. Of course, you'll have to trade real money for the digital currency to get the goods or services to get future profit. So for this purpose, you need an excellent step-by-step guide for trading cryptocurrency. Now let's begin with what is cryptocurrency, the beginner's guide. Cryptocurrencies work using a remarkable technology called blockchain. The blockchain, which is the technology that powers the movement of bitcoins from person to person, is a ledger distributed across millions of people. The blockchain is the force that keeps Bitcoin in motion as it enables the transfer of bitcoins and records all transactions. Wealth is not about you having a lot of money, but it is about having a lot of options. Cryptocurrency is deemed to be a great option. Beginners may get anxious before trading, and at the beginning they wonder if cryptocurrency is safe or not. It is common to be extra careful and stressed, mainly if a ton of cash is on the line. Be that as it may, cryptocurrency is an exceptionally safe choice for trading and investing. If you are looking for a valuable guide about trading in cryptocurrency, you need to know some of its basics. We are starting from its types. Types of crypto trading. There are two important types of crypto trading. Number one is fiat to crypto. In this type, fiat, USD, GBP, and EUR, is the base money, and you exchange it against digital currencies like Bitcoin, Ethereum, and others. The objective here is to develop your fiat cash and regularly book the profit. Many beginners stick with fiat to crypto trading, which seems comfortable and familiar. And number two, we have crypto to crypto trading. Crypto to crypto trading is the most productive type of crypto exchanging. In this type, you use crypto as a base and exchange against other digital currencies like altcoins to develop the base coin. This crypto-to-crypto trading is prevalently known as altcoin trading. This is perhaps the ideal approach to expand your Bitcoin holding in the hour of the buyer market. Now let's look at the ways to get started cryptocurrency trading. You need the following things. Number one is funds. There are two popular ways to fund your crypto trading account: Bitcoin and fiat like USD, GBP. The idea is to buy Bitcoin from your local exchanges and transfer the Bitcoin to any crypto trading platform. You could decide the number of assets you might want to place in crypto exchanges. As numerous shrewd crypto traders shared, you should use cash to exchange what you are willing to lose. Number two is a cryptocurrency trading website. A crypto trade offers high liquidity and complex exchanging crypto devices. Since you need to purchase Bitcoin or other cryptos to begin, it should offer an alternative to buy crypto from fiat. Binance has been the most used crypto exchanging site for trading crypto for the past few years. One reason for that is that it offers a wide variety of cryptocurrencies and is one of the best trading engines. It also supports spot trading, margin trading, arbitrage trading, and futures trading. A spot trade, also known as a spot transaction, refers to purchasing or selling a foreign currency, financial instrument, or commodity for instant delivery on a particular spot date. Margin trading means you buy and sell stocks or other types of investments with borrowed money. That means you're going into debt to invest. Arbitrage is a form of trading in which a trader seeks to profit from discrepancies in the prices of identical or related financial instruments. In futures trading, all futures investment is found in various markets, like stocks and commodities. It likewise fills in as a bank, as you can procure revenue on inactive assets. Number three is risk management. Risk management is one thing that I highly recommend you learn right away. Many smart people lose all their money in trading because they get overconfident by not following the necessary risk management principle. Remember, you won't win all the exchanges you take, and with proper risk management, you will limit your losses. Risk management is one reason I highly recommend you try paper trading before you use real money. At number 4 is paper trading. There is an excellent alternative before putting real money into crypto trading by using paper trading. In paper trading, before you place your actual money, you practice crypto trading. In this way, you can always check your trading skills before you start putting in your hard-earned money. 3 Commas is a fantastic platform that offers paper trading for free. So go and grab the chance. If you like this video so far, hit the subscribe button and don't forget to give us a thumbs up. Now let's talk about the different forms of cryptocurrencies. When most people think of cryptocurrency, the chances are that they are thinking of Bitcoin. Bitcoin is considered the cryptocurrency lead, the coin that propelled thousands of coins. However, as seen on popular cryptocurrency price tracker CoinMarketCap, there are over 2,500 cryptocurrencies, many of which use their own custom blockchain design to their specifications. So let's go over a few of the most popular types to give you an idea. Number 1 is Bitcoin. Referred to as digital gold or the gold standard for all cryptocurrencies, Bitcoin, which debuted in 2009, has ruled king over every other cryptocurrency. With a market capitalization of over $900 billion, Bitcoin rules the rest of the cryptocurrencies with the lion's share of all cryptocurrency market cap. However, investing in just one Bitcoin is a costly endeavor compared to other investment vehicles. Number 2 is Litecoin. Referred to as the silver to Bitcoin's gold, Litecoin was made as a fork or split from Bitcoin and released in 2011 as competition. In addition, Litecoin was made to process exchanges faster and cheaper than Bitcoin. At number 3, we have Ethereum. Ethereum is another big cryptocurrency powerhouse, but it isn't implied to be a peer-to-peer payment scene like Bitcoin. Instead, Ethereum was launched in 2015 as a big decentralized software platform that powers savvy contracts, programmatically implemented contracts, and conveyed applications, decentralized apps or Dapps, which we'll talk about next. Okay guys, so at number 4, we have Dapps. These decentralized applications are autonomous, open source, have 100% uptime, and leverage all the advantages of a blockchain. There's no central server, so it is extremely difficult to be hacked. Imagine the applications in the App Store are their own entities rather than being centralized through Apple. This is what a Dapp is. Nearly 3,000 Dapps are using Ethereum's blockchain and the blockchain of a few Ethereum competitors, such as EOS, NEO, and Qtum. Now let's move towards the cryptocurrency best practices. While cryptocurrency allows everyone to become their own bank, this also comes with a few unpleasant realities. No central bank means no customer service, no guaranteed asset protection for cryptocurrency amounts, and no representative to call when things go awry. This leaves your digital cryptocurrency at serious risk of getting hacked by malicious third parties, and being lost through personal negligence. For example, sending your Bitcoin to the incorrect address or losing your private key. Therefore, both of these real threats can be avoided by following some cryptocurrency best practices. Cryptocurrency security hygiene revolves around keeping your private key very secure. Remember that your private key is complete access to your cryptocurrency. So if you wrote down your 64-character private key on a note card and someone gained access to it, they are basically able to send your cryptocurrency wherever they please. Here is a quick cryptocurrency security checklist that investors utilize. Use a cryptocurrency wallet, a platform that makes it possible to store, receive, and send cryptocurrency. There are some different types of wallets. The 2 general categories are hot and cold. Number 1 is a hot wallet. Hot wallets are connected in a few ways to the internet. For example, many cryptocurrency trades also provide users with a wallet feature. Thus, if a hacker can finagle their way into someone's trade account, they'd be able to exchange the cryptocurrency. Moreover, if the exchange itself is hacked, the hackers might plunder the cryptocurrency as well. Another amazing type of hot wallet is a software wallet, which is hosted as a program on your computer system. Number 2 is a cold wallet. Cold wallets are not connected to the internet and are therefore technically safer than hot wallets. For example, many cryptocurrency exchanges that hold huge amounts of cryptocurrency tend to keep a majority in offline cold wallets to minimize the damage if a hack occurs. Cold wallets include hardware wallets, basically little plastic devices specifically designed to keep someone's private key safe. Another type of popular cold wallet is a paper wallet, which is literally your private key printed or written down on a sheet of paper. Another security factor is enabling two-factor authentication. Remember, most cryptocurrency, such as Bitcoin, cannot be hacked, in the sense that someone can manipulate its programming as they please. However, the places that store private keys are within reach of being hacked. The first line of defense is someone's personal account. If funds are being held on a cryptocurrency exchange, it is important to use secure and unique passwords that are not used for any other account, Gmail, Facebook, etc. If two-factor authentication is enabled, even if someone uses someone else's password, they will still need to be approved via a text sent to the person's or Google Voice number. If available, Google Authenticator is an extra layer of security. Google Authenticator is an app on phones that implements two-factor authentication and generates new codes every 30 seconds that must be entered correctly to gain access to an account, which is very secure. That's it for today's episode. I hope you are one step closer to understanding what trading cryptocurrency is all about. Don't forget to leave a like and subscribe so you can join the Financial and Investment Wisdom Squad and be a part of the channel. Thanks for watching the video. We'll see you next time. Goodbye.